TikTok has been one of the most effective opportunities for mortgage loan officers in 2022, and it just got even better. About a month ago, TikTok actually made it possible to start targeting by income levels in addition to their other targeting methods. I didn't want to make a video about it until I tested it out myself to find out how effective it was, how accurate it was, and if it even worked. And I can say that after a month of testing this new feature, I was pretty surprised and the results were pretty mind-blowing. When they first launched this new feature, I was worried that it was going to take some time to get it ramped up. You know, TikTok is kind of new and evolving pretty fast in the advertising space, so I didn't really know what to expect. So I immediately started testing all kinds of different income levels, and they have the top 5% of income earners, the top 5 to 10% of income earners, the top 10 to 25%, and top 25 to 50%. You can choose just one of these options, or you can choose a combination or even all of these options. So as soon as this new feature came available to me, I immediately launched some campaigns testing out different combinations of these income levels. And the next morning when I woke up, I have to say I was pretty worried to log on to the ads manager and look at the results. I didn't know what to expect. I didn't know if, one, it was even going to work. Two, what if nobody opted in, right? Is a brand new feature. I had no idea what to expect. So that morning, I logged on to the ads manager and I looked at the leads that had come in so far. And you know, obviously it was the next morning, so there weren't a ton of leads, but the ones that were there were actually pretty good. But obviously it's too small of a sample size to see if it's really effective or not. So I gave it 3 days from when I launched to get a really good idea of how it was going to look, and the results were crazy good. We did see a significant increase in the average income level of the leads coming in, which is great because that's the targeting method, but also in credit scores. We got a higher percentage of our leads with good credit scores and even more leads with money saved. So it kind of makes sense. You know, higher income earners are more likely to want to take care of their credit and have more money saved. So that was super exciting to see. One of the biggest advantages for TikTok right now, and what makes it so lucrative, especially for mortgage loan officers, is that there's hardly any competition on the platform. So you can get really good quality leads for a low cost compared to really any other advertising method. And with this new targeting method, it looks like TikTok is, one, they're continuing to improve their platform, which is great, but it looks like it's going to be even more lucrative for mortgage loan officers because these results have been pretty consistent across every single ad account that we manage. Now you may be wondering how this affected the volume of leads, so how many people we were getting opting in compared to before. Now I do have to say the volume did go down, but the increase in the amount of quality leads that we're getting is obviously a no-brainer, a great thing. The metric that we look at is not the cost per lead, but instead the cost per quality lead. If we were just worried about cost per lead, we could probably get like $2 or $3 leads, but how good are they gonna be? They're probably not gonna be that good. So what we do is we look at how many people with good scores and good answers to the income and the money saved for a down payment. We look at those leads, then we look at how much we spent, and we try to find out how much we're paying for the good quality leads. So you never want to worry about the cost per lead per se. Always look at the cost per quality lead because your main goal is to get qualified borrowers on the phone with you and filling out an application and starting to look for a home, and not just how many leads you can generate. You may be wondering what other types of targeting methods that TikTok has, and there's actually quite a few that some could be really useful when you're looking to target potential home buyers. First is interest-based targeting, which can start with kind of broad interest, but they actually get pretty specific in what you can target for on TikTok. You also can target based off of how they interact with different videos in different niches. So you can basically, if they watch a certain video in a specific niche to the end, or maybe share that type of video, same thing with creators. So you can target people based off of how they interact with creators in different niches. And then of course you have hashtag targeting, so you can target based off of their interactions with different hashtags. As TikTok grows and becomes more sophisticated with their platform and their targeting methods, I expect it to become even easier and even more lucrative for loan officers to get more deals. Also, you can target based off of age as well, which is Something that a lot of people actually don't know, anytime that you first talk about TikTok ads with somebody, they always assume like, why would a bunch of 18-year-olds and 14-year-olds want to buy a home? Well, we don't target those people. We actually exclude them, and we set age ranges that are most likely to be able to purchase a home. What do you think about using TikTok or TikTok ads as a marketing method for mortgage loan officers to get qualified borrowers? Let me know down in the comments. If you have any questions or just want to talk about it or just want to share your opinion, we'd love to hear from you. And if you're curious as to what spending $30,000 on mortgage leads on TikTok ads looks like, then I highly recommend checking out this video, because we break down what we saw in terms of quality and quantity and everything else when we spent $30,000 to get mortgage leads on TikTok. So until then, I'll catch you later.